Have you ever wondered why, even with money saved in the bank, it feels like your wealth is slipping through your fingers? Our journey begins by unraveling one of the greatest financial illusions of modern times, the idea that your money is safe and growing in bank accounts. But as we delve into the intricacies of this financial puzzle, you will discover 8 investment strategies, each of them like a well-guarded secret to protect and grow your wealth in a world where the value of money seems to be constantly declining. And stay tuned, because the 7th investment method may surprise you at the end of this journey. Stick with us until the end to unravel the secret of how to build and preserve your wealth in an ever-changing economic landscape. 1. Value stocks and mutual funds. Investments in treasury bonds certainly offer better returns than cash, but due to low risk, they provide lower returns compared to stocks. While low risk is a crucial investment criterion for risk-averse investors, higher returns are sought by almost all investors, and stocks are a great way to achieve that. Moreover, not all stocks carry the same level of risk. In fact, the stock market is broadly divided into 2 types of stocks: value stocks and growth stocks. Growth stocks, like tech stocks, are riskier as they deal with ideas and technologies that have a high potential for failure. However, value stocks, like Nucor that deals with industrial metals, are less risky due to established demand for the foreseeable future. Therefore, value stocks with solid fundamentals not only offer steady and consistent price appreciation, but also provide stable dividends. Researching the fundamentals of each value stock can become very time-consuming and complicated for individual investors. Therefore, dividend-focused mutual funds like the Vanguard High Dividend Yield Index Fund Admiral Shares, with a history of stable dividend payments, are ideal and accessible investment vehicles for individual investors. 2. God's money: gold, silver, and platinum. One of the main reasons money is considered valuable is because it is used to store value for the future. However, governments nowadays keep printing more and more money to finance their deficits. Therefore, you never know when that piece of paper you call a dollar will become worthless. That's why financial experts recommend investing in something valuable that is scarce and cannot be easily created. This is the main reason why the wealthy always have a portion of their portfolios reserved for precious metals like gold, silver, and platinum. They will always increase in value when inflation surges. Before the 1950s, an ounce of gold could be bought for $400. In 2023, the same ounce is sold for over $2,000. And according to Prime XBT's gold forecasts, it is expected to reach $10,000 by 2032. That means, in about 10 years, your gold investments will be 5 times larger than they are now. While money continues to lose value, gold continues to increase in value. Similarly, other precious metals are also better than holding money in the bank. If you're wondering how to get exposure to gold in your portfolio without buying physical gold, you can invest in gold ETFs. Gold ETFs are highly accessible investment vehicles that offer returns based on the movements of the gold price, without you needing to own physical gold. 3. Cryptocurrencies. Investing in cryptocurrencies such as Bitcoin, Ethereum, and others is an emerging investment option. Cryptocurrencies are decentralized digital assets that have gained popularity due to their significant potential for appreciation. Although they are volatile and high risk, many investors consider cryptocurrencies as an alternative store of value and an asset that can diversify an investment portfolio. However, it is important to research and understand cryptocurrencies before investing, and to consider your risk profile, as the cryptocurrency market can be highly volatile. 4. Industrial commodities. While scarcity is one of the reasons why precious metals are called precious, they also have natural utility value, making them indispensable as industrial commodities. For example, silver is used in the production of electronics, medical equipment, nuclear reactors, and other products. Similarly, other metals like cobalt, nickel, and copper have high industrial demand due to their natural properties, which cannot be easily replicated by alternative materials. To give a clearer picture, since 2020, the demand for cobalt has skyrocketed, with the main reason being its crucial use in electric vehicle battery production, which raised its prices from $20,000 per ton in 2012 to $40,000 in 2022. a 100% increase in just 10 years. Having exposure to such industrial commodities can significantly boost your portfolio during periods of high demand. However, not everyone can invest large amounts in acquiring raw materials, nor can we physically store them or find the right buyers. Therefore, investing in mining company stocks like Rio Tinto, mining-focused mutual funds, or even derivatives like futures and options are great ways to get this exposure. 5. Land and real estate. Accountants consider land as a non-depreciating asset for a very valid reason. It is scarce and always in demand. Since the beginning of time, land has been one of the most valuable resources in the world. We need land for homes, schools, factories, agriculture, commercial spaces, among others, and with a growing human population, its demand will never diminish. Similarly, residential houses, offices, and commercial properties built on land are also always in demand. Therefore, both land and real estate act as excellent hedges against inflation in your investment portfolio. To look at some numbers, according to a Bloomberg study, housing prices tripled between 1992 and 2020, despite a major dip during the 2008 housing bubble. Therefore, having exposure to the real estate market is always helpful when the dollar begins to lose value. However, most small investors only think of entering the real estate market later in their lives because they only think of real estate in terms of the house they live in. However, owning a fully paid-off home is a net worth goal for when you are in your 40s. Having a portion of the real estate market from early on is recommended. You don't need a lot of money to get exposure to the real estate market. You can invest in REITs or real estate investment funds, which are similar to mutual funds but focused on real estate. One of the most popular REITs in the US is Ventus Inc. or VTR, which invests in healthcare real estate, including senior housing, research facilities, hospitals, among others. Alternatively, you can take loans to acquire rental properties. The rent will take care of expenses and mortgage payments, bringing in profits as well. 6. Safe haven currencies. In the current world of fiat currencies, where no currency is backed by gold, geopolitical stability is a crucial factor when investing your money. That's why the wealthy always keep their money in Swiss banks. Switzerland, having one of the strongest economic systems in the world, offers a much more stable geopolitical environment. Therefore, the Swiss franc is considered a safe haven asset in times of turbulence and instability. This has been seen repeatedly, for example, during the Eurozone debt crisis in 2009 and the global financial crisis in 2008, when large amounts of funds were transferred from these countries to Switzerland to avoid wealth erosion due to currency devaluation. Additionally, the Swiss franc serves as a valuable alternative to the US dollar for international trade. For instance, during the recent crisis between Russia and Ukraine, when the US imposed sanctions on Russian energy trade, Russia conducted transactions in Swiss francs, greatly increasing the demand for the Swiss franc and leading to a tremendous appreciation against all other currencies. In early 2023, one Swiss franc was worth 1.1074 US dollars, instantly multiplying the wealth of Swiss franc holders. Therefore, top currencies like the Swiss franc, British pound, and Chinese yuan are great stores of value, but as not everyone can open Swiss bank accounts, currency ETFs and forex brokers like Forex.com help smaller investors get exposure to currencies with as little as $100. 7. Sovereign guarantee. While no fiat currency in the world is backed by gold or any other physical asset, they are still considered backed by the full faith and credit of the government. In simple terms, your money is only as stable as the government backing it. That's why investing in sovereign guarantee is a valuable store of value. The government of any nation is always the last to default. As if the government defaults, the whole nation will enter into a default, and no strong government will allow that to happen. Therefore, one of the safest ways to invest in sovereign guarantee is through government bonds or GSECs. However, only bonds from stable governments with an investment-grade credit rating are advisable. Remember the Greek sovereign debt crisis in 2009, when the IMF, Eurogroup, and ECB had to bail out the country multiple times due to its debt. Therefore, the global strength of a government should always be considered when investing in GSECs. In the US, you can invest in treasury bonds, notes, and bills to get exposure to sovereign guarantee, as they offer better returns than keeping money in the bank and are also backed by the strength of the US government in the global economy. Smaller investors can buy treasury bonds directly from the government through the Treasury Direct portal or the secondary market. 8. Collectibles. Vintage cars, rare artworks, handmade luxury handbags, limited edition watches, and even the first edition of iconic books are part of this asset class. In the case of a common car, its price decreases by half the moment you drive it off the road. However, the math works the opposite for vintage cars. Just like wine, they become more valuable over time. Indeed, according to Autocar, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe was sold in 2022 for an incredible 135 million euros. Only 2 cars of this type were ever produced, and therefore are considered rare collectibles by car enthusiasts. Similarly, in 2017, the most controversial painting by Leonardo da Vinci, Salvator Mundi, was bought by a Saudi prince at a Christie's auction for a massive $450 million. The reason why the wealthy spend significantly high amounts on limited edition items is that these unique pieces are timeless stores of value and can fetch an unimaginably high price if you find the right buyer. However, for common investors, investing in collectibles may seem like a distant dream. Therefore, online market platforms like Whatnot are fantastic options for selling rare baseball cards, comics, action figures, and more. And if you can't afford to buy the entire item, you can even invest in fractional ownership of collectibles on platforms like Convey and Masterworks.